Hi, everybody. We will get started. I have a lot to cover this morning on our fiduciary training, so I'm going to dive right in. My name is Jenna Witherbee, and I'm one of the advisors on the team at 401k Plan Professionals. I'll be covering your role, main duties, and administrative best practices when it comes to being a 401k plan fiduciary, and also talk about the education piece for your participants. Again, my name is Jenna Witherbee, and our team, 401k Plan Professionals, we are a team that specializes in corporate retirement plans. A majority of our clients are 401k plans. We have some 403b plans, cash balance plans, and whether you already work with us, you're a plan sponsor or a fiduciary that is familiar with our team, or if you are brand new to working with us or learning about what it means to be a fiduciary, I am confident that you will walk away today with a lot of great nuggets. And please feel free, if you have questions, you can drop them in the chat as we're moving through. I'm going to try to keep this to 25 minutes. So there's going to be a lot of content here, and then I'll take some time to answer those questions at the end. This is a part of our fiduciary training for 2025. We've done this for the last several years, and this year we're going to separate it into 101, 201, and 301. So today is a little more on the basics to give you a really good foundation and understanding of what it means to be a fiduciary. And then our next training, the 201, is going to be in June. You will get the recording of this link automatically emailed for you, and then it'll also live out on our website and our YouTube channel. Feel free to share this with anyone you know that would find value in it. You'll also get a fiduciary guide, a checklist, and there's an optional credential that I'll tell you more about at the end. So again, here's kind of our roadmap for 2025. Today is 101, in June is 201, and then in October we'll have the 301. And you can actually register right now for these, scan the QR, and even if you don't know what you're doing on those days, as long as you're registered, you'll get a recording sent to you. So that's the most important thing. All right, so let's dive in and talk about your role as a fiduciary. First, I'm going to set off one of these polls just to kind of gain an understanding of where you are at. All right, so rate your confidence when discussing who's a fiduciary and your own role and responsibilities. Do you feel very confident, somewhat confident, or I do not feel confident? All right, I'm going to share the results here. And no matter where you fall on this spectrum, I just want to, pat you on the back for even being here and wanting to learn more about it, wanting to get better. And it's only going to help further your knowledge, your understanding, and help you as you're making decisions. So, okay, thank you so much for answering. It looks like most people feel somewhat confident, and a few feel very confident or don't feel confident. Okay. So what is a fiduciary? There's a lot of different directions we can go and different definitions, but ultimately it's a person or an organization who's required to act in the best interest of another party rather than their own kind of individual financial interests. So you can see a lot of examples here of who falls into that fiduciary category. So the key here is that individuals make or at least have the authority to make decisions on behalf of the retirement plan. So you may be a committee member, you may be someone in the payroll department who's submitting contributions, you may be a CEO, CFO, director of HR, and touch the 401k plan in some way. If you make or have the authority to make decisions on behalf of the plan, you are a fiduciary. And breaking it down even further, this can be an individual or entity who exercises discretionary authority or control over the management of the plan, provides investment advice for a fee. So that would be where my team falls, is in category number 2. And then number 3 has any discretionary authority or responsibility in the administration of such plan. And a key here is that your title doesn't necessarily make a difference. Your title doesn't matter to ERISA. In determining whether a person is a fiduciary, it's irrelevant whether you intend to be one, whether you know you are one, or if you're authorized to act as one. If the functions of what you are doing is an act of fiduciary, then you are one. And then there's two types to break it down even further. There's named fiduciaries and there's unnamed fiduciaries. So named would be people that are specifically identified in a plan document, say in the adoption agreement, which we'll talk about all these documents in a moment, but you might be specifically named in a summary plan description. Say you are an officer, an owner, an authorized signer of a plan. On the right, there are also unnamed fiduciaries. So a really good example here is someone who is in the payroll department submitting contributions. They're maybe not named on any documents, but ultimately they have a role in the 401k. So it's important to understand what kinds of activities are considered fiduciary activities and which ones are not. And I have a list here. So some examples of fiduciary activities on the left. So selecting your plan fiduciaries in the first place, selecting your service providers, so that's like selecting our team, hiring 401k plan professionals to be your advisor, or hiring your record keeper to be the provider of your plan and hold the assets and send the participant statements and provide the website and everything. Monitoring fiduciaries and outside service providers, selecting the investment options, monitoring the investment options, exercising discretion in approving claims. So say you're approving hardship withdrawals or loans, things of that nature. And on the right, non-fiduciary activities, preparing communications, educating the participants about their rights and responsibilities under the plan, implementing investment elections, establishing a plan in the first place is not a fiduciary activity. That's a business activity. Adopting an amendment to the plan, approving to terminate a plan. So, it's kind of interesting and it's important to know that distinction between these different types of activities. So there's business decisions and also fiduciary decisions. On the previous slide, I mentioned just deciding to have a plan in the first place and deciding on the features of that plan. Are we going to have a match? Are we going to have profit sharing? What are our eligibility rules going to be? What are the distribution rules for this plan? And the decision to change anything about the plan design by way of an amendment or even terminate a plan. Those are business decisions. But then when you take the steps forward to implement those or hire individuals or companies to help you implement those are fiduciary acts. And a lot of plan sponsors decide to outsource some of the administrative activities, right? Because you wear a lot of different hats. The 401k is not necessarily your sole responsibility. You have a lot of other things on your plate. And so you can outsource some of these activities to other service providers, such as the record keeping. So you're deciding to hire a provider such as Principal, Fidelity, Vanguard, Empower to be your actual record keeper. Sometimes you can even outsource to those providers to be the ones that approve distributions, loans, things of that nature. Investment advisory services, that's where our firm would come into play. You're hiring us to monitor the investments and consult with you on the plan design and educate your staff and work with your provider on behalf of you and look at the fees and benchmark the fees. So those are some examples there. This slide is incredibly wordy, but there are 3 different types of fiduciaries, and I just wanted to make sure we mention this. So they're established by ERISA sections 316, 321, and 338. So they're not very creatively named. They're just 316, 321, 338. And the 316 is more on the administrative side. So making sure that the plan is kept in compliance, This is a lot with notices and disclosures, making sure that participants are receiving the proper reporting that they need. And then in the blue box, our team falls into either the 321 category or 338. We do both. Um, what we're doing here is we're acting as a subject matter expert. So we're providing investment advice to help you as the plan sponsor make decisions on the investments. And so we compile the reports, we come to the committee meetings ready to discuss our recommendations, and we've already screened other funds, and we're typically coming with, a few different potential options and giving our recommendation on which one, let's say, is a good fit to either add or maybe change out with one of your current investments. Ultimately, the vote or the decision is still on you as a plan sponsor. And this is where we fall most, I would say. So at the end of the day, you as a plan sponsor still get the ultimate decision, but we're basically providing all that um, information for you to make that decision. The only difference between that and a 338 is that we would have full control over that decision. So we'd come prepared, same everything, same information, but we would say, this is just the change that we're going to make, instead of the plan sponsor or committee members kind of voting on that. And we don't charge something different because we're a 338 versus a 321. In our view, we're still doing the same work. We're still coming with the same recommendations. It's just technically who gets that final vote, if you will. And no matter what, no matter if you hire our team as 321 or 338, you as a plan sponsor can never totally step down from your role as a fiduciary. So ultimately, you still have the responsibility of making sure the contributions are put in timely. You're hiring our firm, you're hiring your providers, you have some skin in the game. But with our process, everything is streamlined as much as possible to mitigate your fiduciary liability as much as possible. There is something too called a pooled employer plan, and not all advisors offer these. We have one called 401k plan collective, 401k collective, excuse me. So in this environment, you can opt into this pooled employer plan. You still have your own individual plan name and plan design and things like that. But it really streamlines a lot of the other decisions. There's one core investment lineup. There's one tax filing, one 5500 form. There's one audit. And so as you can see in this chart, it really takes away a lot of the responsibilities of the plan sponsor. Again, you can never completely get rid of the fiduciary liability. You're still hiring your service providers to help you and outsource these types of activities. But it's another kind of option if you want to take as much burden, as much work off your plate as possible. And you can scan this QR and it'll bring you to a page on our website. There's a video to explain more about this pooled employer plan. Okay, so basic ERISA fiduciary duties. Really, the basic duties can fall into these 5 categories here. Managing the plan with only the interests of the participants and their beneficiaries in mind. We talked about that. You are not thinking about things from a lens of yourself. You're thinking about the group holistically. Monitoring and benchmarking your plan expenses, making sure they're reasonable, following the terms of your plan documents. So making sure in practice you're doing what your plan documents say that you're doing, ensuring the investments are diversified, and doing all of this with care, skill, prudence, and diligence. And really, the performance of a fiduciary can be measured in large part by those 2 key concepts, loyalty and prudence. So loyalty, again, I'm kind of repeating myself, but these are really key definitions here. So fiduciaries act solely in the interests of plan participants and beneficiaries for the purpose of providing benefits for them, and that they pay only reasonable plan expenses. That's just a really, really important key there. And then prudence. ERISA requires that fiduciaries act with care, skill, diligence, and sound judgment when managing the plan and its investments. And it is critical to understand that this is really a process thing. So as long as you have a process in place and you're documenting what you're doing, you're documenting your decisions, and no matter if the market's going up or down or what the external environment is you have your process. Okay. And also your actions are not judged with the benefit of hindsight. So meaning if we were to make an investment decision and then a year later look back and say, well, now that fund isn't doing very well. That didn't turn out to be the best investment decision. Well, at that point in time, a year ago, you made that decision based on the information that you had at that time, whether there was a reasonable basis for the decision to be made at that time is the key. So your actions are evaluated based on the circumstances that were prevailing at the time you made your decision. Again, kind of that important of process. And document. This is also where we come into play too, is we prepare the reports for committee meetings and we send you a copy. We have a copy of everything. We take minutes of the meetings. You have a copy of those. We have a copy of those. So if you were ever to get audited by the Department of Labor or the IRS, they come in and say, show me your documentation, show me your process. You have that. You just call us and we'll make sure you get everything you need. So process and documentation are really key. Here's just a sample agenda of a committee meeting. These are all things that our team prepares. So the agenda, afterwards the minutes. We typically bring a plan review from your provider. So looking at a lot of data and analytics that are driving the plan overall, participant behavior, things like that. We have an investment policy statement on file. So this is a document that outlines the process you have in place to monitor the investments and what may be reasons to add or remove a fund. And the investment policy statement, by the way, is pretty broad. You don't want to have an investment policy statement that's too hard to follow. So you end up breaking it or not following it. You want it broad enough where it's more of a guideline and you can still follow the parameters of it. Of course, we prepare the investment analysis itself. We compile some of it in-house. We have proprietary reports, and then we also lean on external sources. We have a 12-point scoring system, qualitative and quantitative. We use Morningstar data, things like that. Fee analysis, so we're always looking at what are the fees and then taking it a step further, benchmarking them, making sure they're reasonable, and we talk about an education plan. We also like to be the ones that are conducting the education, and we'll talk about that more in a moment. So administrative best practices. This area is probably where we get the most questions, and I think that from a compliance standpoint and working with your provider, these are just some really foundational things to know. So first of all, your plan document. You need a plan document. You also may have heard of this called an adoption agreement. And it's typically a pretty large document. I mean, I've seen plan documents from 20 pages to probably 60 pages. And in this plan document, it has the rules for your plan and the tax code. So things like who is even covered under your plan, who's eligible, how much can employees contribute to your plan? Are you going to contribute as an employer? Are you going to do a match, a profit sharing? Both. There's different types of matches. There's different vesting schedules. There's distribution options to decide on. There's loan hardship options. Now with Secure 2.0, this recent wave of new legislation, there's even more optional and mandatory provisions that are going to be weaved into these plan documents. But that's first and foremost kind of where your plan provisions lie. Beyond that, there's several other required notices that administrators must provide. You've probably heard of the SPD, Summary Plan Description, SMM, Summary of Material Modifications. There's not only a fee disclosure that's required every year for participants, there's also a fee disclosure that's required that your provider gives you as the plan sponsor. If your plan has a default investment option, especially if you have automatic enrollment, this will come into play. You need to have a disclosure that's saying what your default investment option is. Safe harbor notice. This is um, a provision that pertains to some plans, not all. There's different match structures and a non-elective structure that's considered safe harbor. So you don't need to do all of the compliance testing, all the discrimination testing. We have a whole separate video, by the way, on safe harbor. Again, automatic enrollment, if your plan has that, there's a special notice to let your employees know you will be automatically enrolled on such and such date. And if you need to opt out, this is what you have to do. And then lastly, if your plan is changing providers, it's going through a conversion of some type, there is also a legal notice called a blackout notice. So letting them know when they are not going to be able to access their accounts and make any changes. This is a big, big key. So remember this one, payroll timing. Um, any auditor is going to look at the timing of your payroll deposits. And there's a 15 or 7 business day rule. As a fiduciary, if you have over 100 participants, you have 15 business days from when the money is withheld from the paychecks to when it's deposited into their 401k accounts. If you have fewer than 100 participants, your deadline is the 7th business day following that payroll date. And truly nowadays, with a lot of payroll integration and overall just better flow of data and efficiencies in the payroll area, I rarely see the payroll timing be an issue anymore, but it's definitely a really important key. So make sure, especially if you are personally responsible for the payroll deposits, make sure you're making them on time. So key points here, timely deposit we talked about was really important. Reasonable segregation, meaning that the contributions are reasonably segregated as soon as possible from the company's general assets. And then consequences if late. There can be penalties, excise taxes, and potential legal issues. Your provider takes this really seriously too, and you may even have kind of built-in warnings if they know they are supposed to get your payroll contributions on a certain date and they don't. Sometimes you'll get a little email or some sort of a warning that says, you're risking being late, and you kind of get your hand slapped if you do that a few times. Some compliance deadlines. So let's talk about some dates. So every 401k plan has to file a Form 5500. There's a short form and a long form, so that depends on the number of participants. But the filing deadline is July 31st for calendar year plans. You can file an extension. That summary plan description I talked about, that is something that every participant needs to get within 90 days of enrollment, and then every 5 years or 10 years if no changes. And some plan sponsors and plan administrators, just as their kind of internal practice, they just give it to every person right away upon hire. If they have immediate enrollment or enrollment after 30, 60, 90 days, here you go, you get it right away, kind of in all of your new hire information. The SMM is if you do make an amendment, a change, a modification to your plan document, you need to notify participants with an SMM. Talked about that fee disclosure, that's an annual disclosure, and some providers will send the fee disclosure to your participants automatically. This is something you'll want to find out. Is this being sent automatically, or is this something that I'm going to need to take care of? Your provider will compile it always and put it together, but make note of who's actually sending it. The QDIA is due to them 30 to 60 days before the start of each plan year. So typically with calendar plan years, they're sending that out sometime in November, right? Notice of the blackout period, if you are going through a conversion, they're needing to get the notice at least 30 days before the blackout period starts. Safe harbor plan notice is similar to number 5, the QDIA, due at least 30 days before the start of the plan year. So typically that's done in November because it needs to be out by December 1st. 1099-R forms for distributions are typically sent out by your provider. So just would want to double check that. I don't work with anyone, I don't think right now, that their provider is not doing this, but those are due January 31st. And then any corrections, if you had compliance testing issues, failures, money went in the wrong place for some reason, those corrections are due March 15th for calendar year plans. And this is a part of what your provider is doing, or your third-party administrator, for the compliance testing. So they take that all very, very seriously. And again, you'll get a guide and a checklist from us, and so you'll have the 2025 compliance dates there. And then just if you don't have a calendar end plan, you'll just need to kind of make that adjustment for your plan. So the dates that we talked through and that we're looking at on this guide are for calendar year plans. All right, the last piece here, and then I'll go into questions, is on educating your participants. And we do this in a variety of different formats: group meetings, individual meetings, custom flyers. We use a lot of QRs. And really, at the end of the day, we want people to take action. And so we've been really creative with how we communicate with people, when we communicate, the style, the frequency, and we work with you as a plan sponsor to decide what works best for your group, really. The virtual presentations have shown to be very successful over the last 5 years or so, especially the individual signups. So we utilize something called Once Hub. We can send out a sign-up link. We even have standing dates every month that we call office hours. So people can sign up for 30 minutes, and it puts the invite with the link on each of our calendars. You can tell us in advance if there's something you want to discuss or not. A lot of people meet with us and just say, hey, I want to check in. Can you just look over my account? So we track too the data. We track how many meetings we do like this, and they've been really well received. They work better for some organizations than others. Some were certainly doing the in-person, signing up that way, sitting at a table together, but the virtual one-on-ones have shown to be pretty successful. And we also created an in-house, on-demand 8-step wellness series. And this is something that lives out on our website and our YouTube channel. This is nice too, because as we're having conversations with people, it doesn't just stay in the realm of 401k, right? So we're having conversations with people about their outstanding debt sometimes, or we go into talking about their health savings account and should I be doing that? And I've got investment options in there. Or I have kids and it's a goal of mine to save for their higher education expenses. So we may talk about 529 plans. And so this wellness series has really been a great guide for us to help people. Here's just some examples too of embedded videos that we can do, enrollment videos, or even inviting us on if you have a standing meeting with your staff. I do a monthly coffee chat with one of my clients. They get together with all their staff, about 75 of them, every Friday morning on Microsoft Teams. So things like that, or if there's a FAQ or certain topic that you want us to discuss with your staff, we can get really creative with that. And then here's just some examples of handouts, upcoming education meetings, or on the right, just kind of a general plan highlights. Here's the contact information. Here's your advisors, that kind of a thing. Okay, one poll, and then we will answer some questions. So I am just curious if there's any other topics you are wanting to learn about. So if anything kind of sticks out to you, plan design, investment fees, legislative updates. overseeing your service providers, Social Security, Medicare. And some of these we've done webinars on, actually some of them pretty recently. And so I'm happy to share information, resources, the recordings with you. Okay, so here's the results here. So kind of a mixed bag. Our leaders, our legislative updates. There's a lot going on, like I mentioned, with the new Secure 2.0 legislation. So we are certainly weaving that into our 201 in June, and mergers and acquisitions. Okay, thank you so much. All right, so there is, just wrapping up here, there is an optional credential that you can get when you exit here. There's going to be a really short survey, and you can let us know in that survey if you personally are interested in going through this optional credential just to further your understanding of being a fiduciary. We pay for it. This is something that is nice just to have in your fiduciary file. All right, I'm going to see what questions came up. We have, how often should your committee complete ERISA training? We do this once we have a new committee member. That's a great question. I see a lot of variance here. Some committees are following exactly like what you said. Once they have a new committee member, the new individual will go through the training. Some are frequent flyers on my fiduciary trainings, and they're here every time. I think it's one of those topics that if you hear it more often over and over, it kind of sinks in more. And it's not necessarily a exciting topic, but it is one that's really important. And then I've had some committee members that decide to do that extra credential one time, put it in their file, and that's something that they can, show that they did and kind of refer to. We also have a annual half-day fiduciary summit in person. That's coming up late April, and that's another great, little mini conference that you can come to, get a lot of great information, not only from our team, but other experts in the 401k industry and surrounding industries. And again, just have it in your file and show that you're keeping up on your fiduciary training. Here's our website and our YouTube channel. All of the webinars we've done in the past are out there. Here's our 2024 webinars we did, as well as the 2025 roadmap here. So you can see what's coming up. These fiduciary trainings are kind of sprinkled in throughout the year, and you can see other topics. Social Security and Medicare continue to be two of our more popular webinars. And you can register in advance for any of these. Our next one is March 20th, and it's about leveling up your organization's LinkedIn. And we're co-hosting with a subject matter expert there. And then March 15th, this one is actually for SHRM credit if you need that, but it's called 8,000 Days of Retirement. All right. Thank you so much, everybody, for joining. I don't see any other questions that have come in. Someone said, what's a good stock to buy? I'll call you after. All right. Thank you so much, everybody. Really appreciate it. Thanks in advance for filling out the survey, and you'll get the recording link as well. All right. Bye-bye.